Welcome to the Deep Dive. Today we're pulling back the curtain on something that sounds pretty mysterious. Dark pools. Specifically, how these hidden trading spots might be impacting Ripple's XRP.
That's right. We've been digging into the source material, mainly an article over on KryptoKraken.com, to really unpack this for you.
Yeah, our goal here is to figure out what dark pools even are, how this kind of private trading works in crypto, and, well, how it might affect XRP's price, its transparency, and what it all means for you listening in.
Exactly. And if you want to read the full article yourself or just explore more on crypto and blockchain, definitely check out KryptoKraken.com. Lots of great stuff there.
Okay, so dark pools. It sounds intense. What are we actually talking about? Why do they even exist?
Right. So think of them like private clubs for trading. The source material describes them as places where big institutions trade large amounts of assets, but anonymously, away from the public eye, like the New York Stock Exchange or NASDAQ. They actually started in traditional finance way back, late 70s, 80s.
Oh, so this isn't some new crypto invention then?
Not at all. They came about because the big players, pension funds, mutual funds, needed a way to move massive amounts of stock, millions of shares maybe, without basically telegraphing their moves and having the market turn against them.
Makes sense.
Yeah. A key regulation was SEC Rule 19C3 back in '79 that allowed some trading off the main exchanges and sort of paved the way. Early examples were things like Instanet's after-hours cross and ITG's posit.
And I heard they've grown like a lot since then.
Oh, massively. The source mentioned that by 2017, something like 40% of all U.S. stock trades were happening off exchange. That's up from maybe 16% just 7 years before that. It's a huge slice of the action happening, behind the scenes.
40% is.
Yeah.
Wow, so the main advantage is keeping things quiet?
Yeah.
Like if I want to sell 10 million shares, I don't want the whole world to see it coming.
Exactly right. Put a huge sell order on a public exchange. Everyone sees it. They panic or try to get ahead of you, and the price just tanks before you're done. In a dark pool, you find a buyer privately. The system matches you up internally. Often, the price is pegged to the midpoint of what the public market is showing the bid-ask spread, but the trade itself, it only gets reported later.
Ah, okay. So it uses the public price as a reference, but the actual transaction is hidden until after it's done.
Precisely. There's no visible order book like you see on Coinbase or Binance. You send your order, the pool tries to match it, and the public only sees the price, the volume, the time afterwards. That privacy, that's the big draw for institutions moving serious size, liquidity without showing your hand.
But doesn't that secrecy cause problems? Sounds like it could put smaller investors at a disadvantage.
It absolutely can, and that's the controversy. They are legal, regulated things called alternative trading systems, or ATS.
Yeah.
But yeah, the lack of real-time transparency gets a lot of criticism. People argue it skews the playing field against retail folks and might distort how prices are actually discovered because so much volume is invisible initially.
Have there been issues?
Oh, yeah. Regulators have fined dark pool operators, things like favoring certain clients or not being entirely truthful about anonymity. So the worries aren't just theoretical.
Right. Okay, so that's the picture in traditional stocks. How does this translate to crypto, which is, well, a bit wilder and less regulated?
Well, the actual systems are different, but the basic idea, the goal, is identical. In the crypto world, the equivalent is mostly over-the-counter OTC trading desks. Also, private brokerages, and sometimes exchanges have internal systems for block trades.
Same concept, though. Big players wanting to trade big amounts without moving the market.
Spot on. You've got whales, institutions wanting to buy or sell huge chunks of Bitcoin, Ethereum, XRP. They use these OTC channels to avoid just demolishing the public order books and getting killed by slippage.
Slippage meaning the price moves against you as your big order fills.
Exactly. If you tried to buy, say, $50 million worth of Bitcoin in one go on a public exchange, you'd push that price way up on yourself. It's inefficient.
Got it. Like trying to fit something huge through a small door versus having a dedicated loading bay.
That's a good analogy. And these OTC desks, they really became a thing in crypto's earlier days, around 2012 to 2016, partly because public exchange liquidity just wasn't very deep back then.
Makes sense.
Now, pretty much all the major exchanges, Coinbase, Kraken, they have OTC desks or prime services for institutional clients. And you have specialist firms, too, like Genesis or Cumberland. The effect is just like a dark pool. Big trades happen quietly off the public radar. Some early crypto projects even tried to brand themselves as dark pools. And institutional OTC volume in crypto, it's been booming recently.
Okay, so let's zoom in on XRP.
Mm-hmm.
How does Ripple itself and XRP fit into this whole hidden trading picture?
Yeah, this is where it gets particularly relevant for XRP holders. But the source highlights a really key development. Ripple acquiring Hidden Road back in 2025. Hidden Road is what's called a prime brokerage.
And they do. What exactly?
Yeah. Well, specifically, Hidden Road launched OTC crypto swaps for institutions right here in the US. These let institutions trade big crypto positions off exchange using cash-settled derivatives. It's described as being very much like a dark pool or an OTC setup.
So Ripple effectively bought a company that builds the infrastructure for this kind of private institutional trading, including for XRP.
Pretty much, yes. Hidden Road provides that regulated plumbing for institutions to trade crypto, XRP included, away from the public exchanges, giving them the privacy and execution quality they want. And they have the licenses, FNR, MiCA compliance, which is important.
But Ripple was doing things like this even before Hidden Road, weren't they? Selling XRP directly.
Oh, absolutely. For years, Ripple conducted OTC sales of XRP straight from their treasury holdings to partners and institutions. They were quite open about it, saying the goal was specifically not to dump on the open market and suppress the price. It was a managed off-market distribution.
And what about ODL, the On-Demand Liquidity service? How does that fit?
Right. ODL uses XRP as the bridge asset for international payments. Now, while the XRP conversion part of an ODL transaction often hits public exchanges, Ripple is coordinating the overall liquidity needed for these flows. That often involves structured deals or OTC arrangements with their ODL partners.
So less like random market buys and sells.
Exactly. Ripple argues these are driven by real payment demand and don't really influence the speculative market price, but it definitely means large volumes of XRP are being moved around in a more controlled, coordinated way behind the scenes. It functions a bit like an internal system matching supply and demand, rather than just pure open market activity.
Okay, we definitely need to talk about that persistent rumor. You hear it in the XRP community sometimes, this idea of a secret private XRP ledger or a dark pool where institutions are trading XRP for like $100,000 or some crazy number. Is that what this is all about?
Ah, yes, that specific theory. Okay, let's tackle it head on. Based on the source material and commentary from people like Ripple's CTO, that idea of a secret ledger with sky-high prices, it's been pretty thoroughly debunked.
Yeah. So definitely no hidden market where XRP costs thousands.
No. XRP exists only on the one public XRP ledger. Ripple's CTO, David Schwartz, and other analysts have stated this repeatedly. Sure, they might use private simulated ledgers for things like CBDC testing, but those aren't markets trading real XRP for value.
And logically, it doesn't really hold up either.
Think about it. Why would any sophisticated institution pay, say, $10,000 per XRP on some secret network when they can literally buy it for, under $1 on the open market? Or even get it at a discount through OTC deals. Remember the old R3 deal, the option to buy XRP for fractions of a penny? Institutions look for the best price, not the highest. They wouldn't overpay like that.
Okay. That puts that specific rumor to bed then. So when we talk about dark pool activity for XRP, it's about institutions trading large amounts privately, but at or near the current market price, not some secret inflated price.
Precisely. It's all about executing big trades discreetly, at the prevailing market rates, specifically to avoid pushing that rate up or down significantly. Privacy and minimal market impact are the goals.
So then the big question, how do these major players manage to buy potentially hundreds of millions or even billions of XRP without sending the price to the moon?
Right. That's the art of stealth accumulation, using crypto's version of dark pool mechanics. Imagine an institution wants to acquire, let's say, 500 million XRP. If they just went and placed buy orders for that amount on Binance or Coinbase,
the price would just explode upwards instantly.
Instantly. They'd end up paying way more than they intended. It would be terrible execution. So instead, they use these other methods. They go to OTC desks who can source that XRP directly from large holders, maybe other whales or miners, or potentially even from Ripple's managed sale.
So direct deals.
Direct deals. Private swaps, or they use sophisticated algorithms. These algos will slice that huge 500 million XRP order into maybe thousands of tiny orders spread across many different exchanges over days or even weeks. executed carefully to minimize their footprint on the visible market. That's the crypto equivalent of dark pool accumulation.
It's like that hypothetical example mentioned in the source about BlackRock potentially accumulating 1 billion XRP.
Yeah, if something like that were to happen, it wouldn't be a single massive buy order hitting Kraken. It would be orchestrated, likely through prime brokers or OTC desks. They'd source the XRP from multiple places, matching buyers and sellers privately. You wouldn't see it hitting the public order books in a way that signals huge institution buying now.
So it's all hidden. How do we even know it's happening? Where's the evidence?
Well, you don't see the trading in real time. What you often see is the result later on the public blockchain. You might see a massive transfer, hundreds of millions of XRP moving from wallets associated with an exchange or broker into a brand new, previously unknown wallet.
Ah, the settlement after the private deal is done.
Exactly. By the time that huge chunk of XRP lands in what looks like a cold storage or institutional wallet, the actual accumulation might have been happening quietly for weeks at prices negotiated privately. And during that whole accumulation period, the public market price might have seemed bafflingly stable or only moved slightly.
Are there concrete examples of analysts spotting this kind of thing?
Oh yeah, definitely. On-chain analysts are always looking for these patterns. The source brought up sentiment data from April 2025. It was really interesting. It showed that the biggest whales wallets holding 100 million to 1 billion XRP, they actually sold off around 370 million XRP over a few weeks. That's huge, like $700 million worth.
And the price crashed.
That's the thing. It dipped a bit, then actually climbed. The massive selling pressure just wasn't visible, hitting the public exchanges hard. The conclusion was that this huge distribution likely happened off-market OTC sales probably, which absorbed the impact and stopped the price from tanking.
Wow. So the selling was happening, but it was hidden.
Right. And get this. During that same period, the next tier of whales, those holding 10 million to 100 million XRP they were accumulating, they bought up around 900 million XRP, roughly $450 million worth.
So huge buying A&D, huge selling, but the price only moved modestly.
Exactly. That massive buy volume only resulted in about a 4-5% price increase overall during that time. Again, it strongly suggests the buying wasn't just smashing market orders on public exchanges. It was likely being filled through quieter channels, OTC, or perhaps those sliced algorithmic orders we talked about.
It really seems institutions care more about getting the amount they want without spooking the market than they do about chasing the price up immediately.
That's absolutely the strategy. Accumulating stealthily through these dark channels stops them from revealing their hand, prevents others from front-running them, and ultimately keeps their average purchase price lower. Meanwhile, retail traders might look at the flat price chart and think nothing big is happening, completely missing the enormous value changing hands underneath.
Which brings us neatly to that big theory in the XRP community. The idea that the XRP price is somehow being suppressed. You see positive news, partnerships, legal wins, but the price stays stubbornly low. Is this dark pool off-market activity the main fuel for that theory?
It's certainly a huge part of it, yeah. A lot of XRP holders look at the fundamentals, the progress Ripple is making, the potential of ODL, and they just can't square it with the price action. So the theory emerges. Are sophisticated players, maybe institutions or whales, using these private trading methods to intentionally keep the visible price down while they load up?
The idea being they want to buy cheap before some future catalyst sends the price soaring.
That's the core of the suppression theory. Some analysts mentioned in the source material argue that public exchanges are increasingly dominated by trading bots and high-frequency algorithms, maybe creating a kind of artificial market noise, while the real significant accumulation is happening quietly, off-exchange.
So the demand is there, but it's hidden, so it doesn't push the public price up.
Exactly. They argue this hides the true demand and stops a potential supply squeeze on public exchanges. The result, according to this theory, is an artificially low market price that doesn't reflect the large-scale buying happening behind the curtain. Proponents might point to things like the decreasing amount of XRP held on exchanges, suggesting it being moved to private storage as evidence. They sometimes call it an invisible force holding the price down, or like a spring being coiled for a future breakout.
And does Ripple Labs itself get implicated in these suppression theories?
Sometimes, yes. Given Ripple holds billions of XRP in escrow and releases 1 billion each month, some theories suggest Ripple might strategically manage its XRP sales or escrow releases to essentially cap the price, maybe to keep it stable for ODL adoption or for other reasons.
Is there any data backing that up?
Well, the source mentions research like from Rafaf Kahneman, who apparently used Ripple's own API data. This research reportedly found patterns suggesting Ripple increased its XRP sales when the price was high, and even bought back XRP when the price was low, like a notable 500 million XRP buyback at one point. The interpretation was that Ripple might be actively working to smooth volatility, trying to keep the price relatively stable.
So managing the price, maybe not maliciously suppressing it, but controlling it.
That's one interpretation, yeah. Ripple themselves stated in a Q3 2022 report that they do buy XRP on the secondary market sometimes, and that their sales are now solely related to supporting ODL utility, having stopped the old programmatic sales back in 2019. So they admit to controlled distribution, which they frame as supporting the network, but some observers see that control itself as a form of price management. And then you have the more speculative, less evidence theories about big banks or legacy players spreading FUD, fear, uncertainty, doubt, while secretly buying XRP cheap via OTC.
Okay, so that's the suppression theory laid out. Strong arguments based on the hidden trading. But what about counter-arguments? Is there skepticism about this whole idea?
Oh, absolutely. And it's really important to consider the other side. The source mentions attorney Bill Morgan, for instance, who argues a lot of the suppression evidence is circumstantial. He makes the point that Ripple's direct impact from escrow releases might actually be quite small compared to the total global XRP trading volume each month, maybe less than 1%, perhaps too small to single-handedly dictate the price.
So Ripple's influence might be overestimated in that theory.
That's the contention. And a really big point. The SEC spent years investigating Ripple with deep access to the records, and ultimately, the court found no evidence that Ripple manipulated the price of XRP. Ripple's own expert witnesses in the trial presented analyses showing XRP's price movements largely correlated with the overall crypto market, like Bitcoin and Ethereum, rather than being driven solely by Ripple's actions or announcements. That directly challenges the idea of a coordinated suppression led by Ripple.
Interesting. So could there be a less conspiratorial explanation for the flat price despite apparent accumulation?
Skeptics would say yes. What looks like suppression could just be, well, the market working, albeit opaquely. Think about it. If a large institution buys XRP OTC, they're probably buying it from a large seller who wanted to sell anyway. If that seller hadn't found the OTC buyer, they might have dumped it on a public exchange, crashing the price.
Ah, so the OTC deal actually absorbs selling pressure that would have otherwise hit the public market.
Exactly. It balances things out privately. So the public order book stays relatively stable, not because of some grand manipulation, but because the total supply, including hidden selling, is meeting the total demand, including hidden buying, at roughly the current price level. The coiled spring might not be guaranteed. The price stays flat simply because supply and demand are roughly in equilibrium once you factor in the hidden flows.
But the lack of transparency is still a real issue for retail, even if it's not manipulation.
Undeniably, that's the common ground. Whether it's deliberate suppression or just efficient institutional trading, the fact remains that a significant portion of XRP trading is happening out of sight for the average retail investor. This information asymmetry is real. It definitely benefits the big players with access to these private markets. Public price discovery is arguably less efficient, and retail traders might be making decisions based on incomplete information.
So even without assuming bad intentions, it's still an uneven playing field.
It really is. Institutions have the tools, OTC access, sophisticated algos, the patience to execute large orders slowly, that give them advantages in execution quality and reducing slippage. Knowing this hidden layer exists is critical for retail. The advice from the source seems to be, don't get completely fixated on the minute-to-minute price on public exchanges. Look at the bigger picture fundamentals, utility, regulation, and try to incorporate on-chain data, like those whale movements or funds flowing in and out of exchanges, to get a slightly clearer view. And definitely don't try to chase whale moves. By the time you see the evidence on-chain, their accumulation at those prices is long gone.
You mentioned some specific examples earlier. Maybe just quickly recap one or two that really drive home how these hidden dynamics play out.
Sure. Ripple's own escrow activity is a good one. While not strictly a dark pool, when they locked up an extra 700 million XRP back in May 2025, way outside their normal monthly schedule that was over $1.5 billion worth, suddenly signaled as not for sale anytime soon. That directly impacts potential supply and fuel speculation, all driven by a central entity's non-market action.
And those whale alert blips we see on Twitter.
Exactly, those bots flagging huge transfers. You see, say, 131 million XRP worth maybe $270 million move between two unknown wallets, or 70 million XRP, $150 million worth, landing on Coinbase just before some price volatility. These aren't typically public market trades themselves. They're more likely the settlements of large OTC deals that happen privately, or strategic positioning by whales. They give you glimpses of that hidden layer of activity.
And the sentiment data showing different whale groups acting counter to each other.
Yeah, that April 2025 example again. The biggest whale selling hundreds of millions worth, while the next tier down bought even more, all while the public price stayed relatively calm. That screams off-market activity. It's like seeing the footprint of the dark pool trades after they've already happened, visible only on the blockchain's transaction history. All these examples just reinforce that huge amounts of XRP value are moving around in ways not immediately obvious on your standard exchange chart.
Okay, this has been incredibly illuminating. Let's try and boil it down. What are the key implications, the main takeaways for our listener, the everyday retail investor, when it comes to XRP and these hidden market dynamics?
Well, I think the simplest way to put it is that these dark pools or OTC mechanisms in the XRP space are kind of a double-edged sword. On one side, they're probably quite necessary for large-scale institutional adoption. Big banks, payment providers, they need ways to acquire and use large amounts of XRP without causing massive price swings. That actually supports XRP's core use case for stable cross-border payments. It greases the wheels for institutional involvement.
Okay, that's the potential upside. But the downside for the average person?
The downside is it really challenges that original crypto ethos of a completely open, transparent, level playing field. As a retail investor looking at public exchange data, you have to accept you're only seeing part of the picture. There's potentially significant activity, major accumulation or distribution happening beneath the surface that you just don't see in real time. It's like looking at the tip of the iceberg.
So, faced with that opacity, what's the best approach?
Stay informed, definitely, but cultivate patience. Try to supplement what you see on exchanges with other data points. Look at on-chain analytics, tracking large wallet movements, monitoring flows onto and off exchanges. Pay attention to Ripple's official reports about ODL volume or escrow management. Focus more on the long-term fundamentals, the tech, the partnerships, the regulatory clarity, rather than getting caught up in hourly price fluctuations that might be influenced by hidden factors.
And maybe adjust expectations about how the market works.
Exactly. If XRP does achieve the kind of widespread institutional use that Ripple envisions, its trading might start to look more and more like the traditional Forex foreign exchange market, where a huge percentage of volume happens OTC between banks and institutions. It requires a bit of a mental shift from thinking purely in terms of public exchange order books.
That's a really interesting perspective on the future.
It is. And the source article summed it up quite well, something like, "For now, the story of XRP's dark tools remains one of intriguing possibilities and cautious optimism. Institutions quietly accumulating a digital asset while retail holders wait for the day the floodgates open. But, always temper that optimism with solid risk management. Understanding these dynamics is vital, but remember, even the big institutions don't always get it right. Macro events or regulatory surprises can change the game for everyone."
An absolutely fascinating look into the hidden corners of the XRP market. Thank you so much for breaking all that down for us.
My pleasure. Always interesting to delve into.
And a big thank you to you for tuning into this deep dive. Just a reminder, the main article we drew from today, full of details, is right there on KryptoKraken.com.
That's right. And seriously, check out the site while you're there. They've got a ton of other great articles, videos, analysis covering all sorts of things in crypto and blockchain. Really valuable resource.
Definitely worth exploring. Keep learning, stay curious, and we'll catch you on the next deep dive.